The purchase order arrived on Monday at 6:47 a.m. Standard notification, material transaction, board-level visibility per Section 11.2 of the Financial Controls Framework. I opened it automatically, part of the routine. PO number, VGH 2825-47. Vendor, Blackwood Strategic Partners, LLC. Amount, $125. Approved by S. Chen. Approval date, January 10, 2025. Status, processed. I read the approval line twice. Thomas Wright's authority had been suspended January 9th. The corporate controller had been designated interim reporting authority by board resolution. Purchase orders above $500,000 required CFO-level approval. This approval had processed January 10, one day after suspension, without CFO's signature, without controller's signature. S. Chen had approved it. I pulled up the delegation of authority matrix, found the succession protocol for CFO-level transactions. Primary, Thomas Wright. Backup 1, Rebecca Portman, controller. Backup 2, Sarah Chen. Third-tier backup authority, the person who signs purchase orders when both the CFO and controller are unavailable. Rebecca Portman had been in the office January 10th. I checked the system logs. She'd accessed the financial reporting system at 8:42 a.m., 5 minutes before Sarah approved the Blackwood payment at 8:47 a.m. Rebecca had been available, had been in the exact system where purchase order approvals were processed, but Sarah had signed. I opened my calendar. The audit committee met February 18th, 5 weeks away. 5 weeks during which someone would be approving CFO-level transactions without documented interim authority beyond a November delegation matrix designed for temporary absence, not permanent suspension. I needed to understand who had decided Sarah would function as acting CFO, because no one had announced that decision. I requested the delegation matrix at 7:04 a.m. David Chen's assistant sent it 27 minutes later with a note. This document is confidential and should not be distributed outside board-level review. The matrix was 8 pages. Transaction types in rows, approval authorities in columns, dollar thresholds defining which signature was required. I located vendor payments professional services. The 500 CAL plus threshold showed 3 names. Primary, Thomas Rackup 1, Rebecca Portman. Backup 2, Sarah Chen. Last updated November 2024. The matrix had been created 2 months before Thomas's suspension, before anyone knew CFO authority would need to be delegated, before the board resolution that designated Rebecca as interim reporting authority. But the matrix didn't distinguish between reporting authority and transaction authority. It just listed backup signatories. First Rebecca, then Sarah. I pulled every purchase order processed since January 9, 4 days. 17 transactions above $500,000. 2 approvals, both under 200. Sarah Chen, 15 approvals, range $125K to $890K. Sarah was approving transactions at thresholds that should have required controller's signature. Rebecca was available, active in the system, attending meetings, but not approving. I opened the January 10th purchase order detail again, the Blackwood payment, looked for requisition information, requisition date, January 8th, 2025, requisitioned by R. Portman. Approval required by January 10th, 2025. Rebecca had initiated the payment request on January 8th, 2 days before Sarah approved it. Rebecca had created the workflow but hadn't completed it, had handed approval to her backup authority without documentation. I checked Rebecca's system activity January 10th. 8:30 a.m. login financial reporting system. Accessed Q4 close calendar. Accessed subsidiary financial statements. Log out. Rebecca had been working in financial systems at 8:42 a.m. The Blackwood payment required approval by end of business January 10 per vendor payment schedule. 5 minutes later, Sarah logged in. 8:45 a.m. login, vendor payment system. Approved PO VGH 2025-00147, logout. 2 minutes, single transaction, logout. Sarah had logged in specifically to approve the purchase order. Rebecca had requisitioned 2 days earlier, had executed the approval while Rebecca was still in the building, had used backup authority while primary backup was available. No delegation memo, no recusal documentation, no explanation in the approval notes. The workflow had simply skipped Rebecca and landed with Sarah. I made a note. Observation. Rebecca requisitioned 1/8 Rebecca available, 1/10, Sarah approved 1/10. No documented handoff. I didn't have evidence of coordination, didn't have proof of instruction, just a deviation from expected approval path. Rebecca should have signed, Sarah signed instead. The system had accepted it. Visual Block 2 starred. I spent Tuesday morning mapping the pattern, pulled every CFO level approval from December 15 through January 13, 4 weeks. Before and after Thomas's suspension. Pattern before January 9th. Thomas 94% of approvals, 500K Rebecca Portman, 6% when Thomas traveling. Sarah Chen. Pattern after January 9, Thomas 0%, suspended. 12%. Sarah Chen, 88%, 15 purchase orders in 4 days. All approved by the third-tier backup authority, all processed while the first-tier backup remained available and active. I reviewed Sarah Chen's employment file, Director of Treasury since 2019, cash management, banking relationships, working capital optimization, reported to CFO, no prior strategic oversight role, no financial reporting responsibility. Competent, efficient, the type of person who processes transactions correctly, who understands approval workflows, who can be trusted to sign when the CFO is unavailable, not someone who functions as acting CFO. I pulled up the organizational chart. Sarah Chen, vacant CEO. The system had updated automatically. Thomas's position showed vacant. Sarah's reporting line pointed to an empty node. Rebecca had interim reporting authority per board resolution. But the org chart didn't show Rebecca supervising Sarah, didn't show Rebecca directing transaction approvals, didn't show any relationship between Rebecca's interim authority and Sarah's approval function. The roles had separated. Rebecca handled reporting, Sarah handled transactions. The division wasn't documented anywhere except in the emergent pattern of who was signing what. I opened the board resolution from January 6, the document that suspended Thomas and designated Rebecca as interim authority. Found the relevant language. Financial reporting authority is delegated to the corporate controller on an interim basis pending completion of audit committee evaluation. Financial reporting authority, not CFO authority. Not all financial functions, just reporting, which meant the board had addressed only half the CFO role. Had designated who would oversee financial statements. Hadn't specified who would approve transactions. The system had filled that gap using the pre-existing delegation matrix. Had defaulted to backup authorities established in November. Had routed CFO-level approvals to whoever the matrix said was next in line. Rebecca was next in line, but Rebecca wasn't approving. Sarah was next after Rebecca, and Sarah was approving everything. Without instruction, without coordination, without anyone announcing that Sarah would be functioning as de facto CFO for transaction purposes. The authority had simply migrated to the signature the system would accept. I made another note. Board resolution scope designated Rebecca for Financial Reporting Authority. Did not address Transaction Approval Authority. System defaulted to November delegation matrix. Matrix not designed for permanent CFO suspension. Result. Rebecca handles reporting, Sarah handles approvals division and not documented beyond system defaults. I spent Tuesday morning mapping the pattern. Pulled every CFO level approval from December 15th through January 13, 4 weeks, before and after Thomas's suspension. Pattern before January 9, 94% of approvals, 500K Rebecca Portman, 6% when Thomas traveling, 0%. Pattern after January 9, 0%, 12%, 88%, 15 purchase orders in 4 days, all approved by the third-tier backup authority. All processed while the first-tier backup remained available and active. I reviewed Sarah Chen's employment file, Director of Treasury since 2019, cash management, banking relationships, working capital optimization, reported to CFO, no prior strategic oversight role, no financial reporting responsibility, competent, efficient, the type of person who processes transactions correctly, who understands approval workflows, who can be trusted to sign when the CFO is unavailable. Not someone who functions as acting CFO. I pulled up the organizational chart, Sarah Chen, vacant view CEO. The system had updated automatically. Thomas's position showed vacant. Sarah's reporting line pointed to an empty node. Rebecca had interim reporting authority per board resolution. But the org chart didn't show Rebecca supervising Sarah, didn't show Rebecca directing transaction approvals, didn't show any relationship between Rebecca's interim authority and Sarah's approval function. The roles had separated. Rebecca handled reporting, Sarah handled transactions. The division wasn't documented anywhere except in the emergent pattern of who was signing what. I opened the board resolution from January 6, the document that suspended Thomas and designated Rebecca as interim authority. Found the relevant language. Financial reporting authority is delegated to the corporate controller on an interim basis pending completion of audit committee evaluation. Financial reporting authority, not CFO authority. Not all financial functions, just reporting. Which meant the board had addressed only half the CFO role. Had designated who would oversee financial statements. Hadn't specified who would approve transactions. The system had filled that gap using the pre-existing delegation matrix, had defaulted to backup authorities established in November, had routed CFO-level approvals to whoever the matrix said was next in line. Rebecca was next in line, but Rebecca wasn't approving. Sarah was next after Rebecca. And Sarah was approving everything, without instruction, without coordination, without anyone announcing that Sarah would be functioning as de facto CFO for transaction purposes. The authority had simply migrated to the signature the system would accept. I made another note. Board resolution scope designated Rebecca for financial reporting authority, did not address transaction approval authority. System defaulted to November delegation matrix. Matrix not designed for permanent CFO suspension. Result: Rebecca handles reporting, Sarah handles approvals, division not documented beyond system defaults. On Wednesday morning, I received an email from Margaret CO. Subject line, Q4 action meeting. Elena, I'm scheduling a Q4 financial close coordination meeting for January 22nd. Given the CFO transition situation, I wanted to make sure we have appropriate representation from finance. Attendees: Margaret Strategy, Rebecca Portman, Interim Reporting, Sarah Chen, Treasury Transaction Approvals, Elena Chen, Committee. Agenda: Q4 Revenue Recognition Review, Intercompany Reconciliation Status, Subsidiary Reporting Timeline, External Audit Coordination. This will be our first close cycle with the interim authority structure. Want to make sure nothing falls through gaps. Margaret, I read the attendee list twice. Margaret was organizing the meeting, not Rebecca, not Sarah. Margaret, who ran corporate strategy, who had no formal role in financial close processes, but who had board membership, who'd served on audit committee previously, who understood governance structure. The meeting invitation listed both Rebecca and Sarah, roles clearly specified, interim reporting, transaction approvals, no hierarchy indicated, no suggestion that one supervised the other, just two people with different functions requiring coordination. But the invitation came from Margaret. I replied at 2:47 p.m. Margaret, I'll attend. Thank you for organizing. One question: has there been any formal documentation clarifying the division of interim authority between Rebecca and Sarah? I want to make sure I understand the governance framework before discussing Q4 close procedures. Elena Margaret responded 18 minutes later. Elena, good question. The division isn't formally documented beyond the delegation matrix. We're operating on the principle that Rebecca handles reporting/oversight, what gets disclosed. Sarah handles transactions, operations, what gets paid. It's working so far. If we identify gaps, we can escalate to the board for clarification. See you on the 22nd. Margaret, it's working so far. Not formally documented, not board approved, not designed, working. The interim structure had emerged in the 4 days since Thomas's suspension, had been recognized as functional, had been allowed to continue because operations were proceeding normally. Margaret was coordinating, Rebecca was reporting, Sarah was approving. No one had announced this arrangement. No resolution had authorized it. The system had simply routed around the vacancy and found an operational configuration. I opened my secure notes, January 9 to 13, observations. Authority migration, Thomas suspended per board resolution. Rebecca designated interim reporting authority. Sarah functioning as primary transaction authority. Division emerged from system defaults, not board design. Transaction pattern, Sarah approving 88% of CFO-level purchase orders. Rebecca approving minimal transactions. No protocol determining which authority handles what. Coordination, Margaret organizing Q4 close meeting. Margaret positioning as intermediary between Rebecca, Sarah. Margaret has no formal financial role. Anomalies. Rebecca requisitioned Blackwood payment but didn't approve. Sarah approved while Rebecca available. No handoff documentation. Questions. Why is Rebecca not using backup authority? Who decided Sarah would handle most approvals? Is Margaret's coordination role recognized by others? Does Julian know this structure exists? I closed the notes and looked at my calendar. The Q4 close coordination meeting was January 22nd, 9 days away. That meeting would be the first time Rebecca, Sarah, Margaret, and I would be in the same room discussing financial operations under the interim structure. The first time someone would have to articulate how decisions were being made. Who was directing what? How authority was flowing between people whose roles had never been formally integrated. The first time the invisible arrangement would have to become visible. On Thursday afternoon, I received a system-generated notification. Subject line, Treasury account access permission change. The email was automated. Standard security notification when access permissions were modified in financial systems. User, Elena Chen. System, Treasury Management Platform. Change type, access granted, new permission level read-only, consolidated view. Authorized by S. Chen. Effective date January 15, 2025. Reason, Audit Committee oversight. I read it twice. Sarah Chen had granted me access to the Treasury Management Platform, the system where cash positions were monitored, where intercompany transfers were executed, where working capital decisions were documented. I'd never requested this access, hadn't asked for Treasury visibility. Had Audit Committee access to financial statements and purchase order approvals, but not to daily cash management operations. But Sarah had granted it. The reason field said Audit Committee oversight. Standard language, defensible rationale, the type of access a principal conducting financial review might reasonably need. But I hadn't asked for it. I checked the authorization timestamp, January 15th, 3:47 p.m., 31 minutes ago. I opened the Treasury Management Platform, logged in with my credentials. The system accepted my access immediately. The dashboard loaded real-time cash positions across all bank accounts, daily transaction logs, intercompany transfer schedules, working capital forecasts, complete visibility into cash management operations, the kind of access Treasury directors had, the kind of access CFOs had, the kind of access that would let me see every cash movement, every allocation decision, every transfer between parent and subsidiary. Sarah had granted this access without request, without coordination, without asking whether I needed it, as if she'd anticipated I would want it, or as if someone had told her I should have it. I pulled up the access change logs, reviewed other permission modifications in the past week. January 10th, Rebecca Portman granted Margaret CO read-only access to financial reporting system. January 12th, Sarah Chen granted Margaret CO read-only access to vendor payment system. January 15, Sarah Chen granted Elena Chen read-only access to Treasury Management Platform, 3 access grants. All to board members, all read-only, all within 6 days of Thomas's suspension. Rebecca had granted Margaret access to financial reporting. Sarah had granted Margaret access to vendor payments. Sarah had granted me access to Treasury operations. The pattern was subtle, each grant individually defensible. Board members conducting oversight, principals reviewing financial operations, standard governance activity during an interim period. But the grants hadn't been requested, hadn't been discussed in any audit committee meeting, hadn't been documented in any board communication. They'd simply been executed by people with system administrator permissions, using authority that came with their interim roles, creating visibility, establishing access, opening information flows that hadn't existed when Thomas was CFO. I made a final note. Access pattern. Rebecca granted Margaret financial reporting access, 110. Sarah granted Margaret vendor payment access, 12. Sarah granted Elena treasury access, no requests documented. All read-only, all to board members. Implication. Information architecture changing alongside authority structure. I closed the notes and looked at my calendar again. January 22nd. Q4, close coordination meeting, 7 days away. Rebecca would be there, Sarah would be there, Margaret would be there. We would discuss financial close procedures, intercompany reconciliations, revenue recognition, external audit coordination, and at some point during that meeting, someone would have to explain how decisions were being made, who was directing financial operations, how the interim structure was functioning, how authority had relocated in the 4 days after Thomas's suspension into a configuration no one had designed, but everyone was operating within. The January 22nd meeting began at 9 a.m. in Conference Room B. Margaret arrived first, took the chair at the head of the table. Rebecca sat to her right. Sarah arrived at 9:01, sat across from Rebecca. No laptop, just a leather portfolio. I took the remaining chair. Margaret began without preamble. This is our first quarter-end close under the interim structure. I want to make sure we're coordinated on timing and responsibilities. She pulled up a timeline on the wall display. Q4 close activities mapped across 3 weeks. Rebecca, status on consolidated statements? Rebecca looked at her tablet. Subsidiary financials due January 24th. Consolidation begins January 27th. Draft statements ready for audit committee February 4th. Risks. 1. Hexagon revenue recognition requires legal confirmation on 2 December contracts. I need contract terms and delivery schedules by January 25th. Margaret made a note. I'll coordinate with David's office. Sarah, treasury status? Sarah opened her portfolio. Handwritten notes. Cash position stable. No liquidity constraints. Intercompany balances reconciled through January 15. Final reconciliation January 31. 3 vendor payments above $500 due before month end, all pre-approved. Margaret nodded. Elena, audit committee perspective? I looked at the timeline. The activities were standard. The responsibilities clear, but Margaret was directing questions. Rebecca was reporting to Margaret. Sarah was reporting to Margaret, as if Margaret were CFO. Timeline looks reasonable, I said. I'll need access to the January 31st intercompany reconciliations. Noted, Margaret said. She made an entry. Who approves the final consolidated statements? Margaret looked at Rebecca. Rebecca looked at Sarah. Sarah looked at Margaret. 3 seconds of silence. Procedurally, controller function, Rebecca said, but given the magnitude, it might require board approval. It does, I said. Section 9.3, quarterly statements require audit committee approval before filing. Right, Margaret said. Rebecca prepares, committee approve, standard process. She moved to the next agenda item. The meeting continued for 47 minutes. Every question Margaret asked received immediate answer. Every timeline Rebecca proposed was accepted without modification. Every commitment Sarah made was documented without challenge. The coordination was seamless, professional, but the roles hadn't been formally defined. Rebecca's authority came from board resolution, Sarah's from delegation matrix, Margaret's from nowhere I could identify. Yet all 3 operated as if their functions had been clearly established. The meeting ended at 9:47 a.m. Margaret closed her laptop. Let's reconnect February 4th after draft statements are ready. Elena, you'll receive the review package February 3rd. Rebecca and Sarah left. I remained seated. Margaret looked at me. Questions? Who asked you to organize this meeting? No one. I saw a coordination gap and filled it. This felt like a management meeting. Margaret smiled briefly. If you'd prefer someone else to coordinate financial close, we can discuss alternate structures. But right now, Rebecca needs reporting oversight and Sarah needs transaction oversight, and neither supervises the other. Someone has to ensure they're aligned. And that someone is you. Until the board designates someone else, Margaret said, or until Thomas is reinstated. She left. I sat alone thinking about what I'd observed. Margaret had organized the meeting, had directed questions, had documented commitments, had functioned as the person ensuring Q4 close proceeded smoothly, without title, without formal authority, without anyone objecting. Rebecca and Sarah had accepted her coordination, had reported to her, had treated her questions as requiring answers. As if Margaret's role were established, as if everyone understood she was directing financial operations, as if an authority structure had been communicated that I hadn't been part of. I spent the afternoon reviewing coordination patterns, pulled email traffic from the past 2 weeks, filtered for messages involving Rebecca, Sarah, or Margaret, found Margaret's initial coordination email dated January 16th, subject, Q4 close, let's coordinate. Rebecca, Sarah, given the CFO transition, I want to make sure we're aligned on timing and responsibilities. Can we meet next week? I'm happy to facilitate. Margaret Rebecca replied at 2:47 p.m. Yes, thank you for organizing this. Sarah replied, agreed. I'll bring cash position and transaction status. No objection, no question about why Margaret was organizing, immediate acceptance. I searched for other coordination emails, found 3 more. January 18, Margaret to David Chen requesting legal support for Hexagon revenue analysis. David replied, we'll prioritize, what's your deadline? January 19, Margaret to external audit confirming timeline. Deloitte replied, timeline works. January 20, Margaret to Julian providing status update. Julian replied, thanks for the update. Margaret was coordinating with legal, external audit, and the CEO, providing updates, requesting resources, managing the Q4 close across all stakeholders, without anyone questioning her authority. I pulled up the board resolution from January 6, the document that suspended Thomas and designated Rebecca. Read it again. Looking for language explaining Margaret's role, found nothing. The resolution addressed Thomas's suspension, Rebecca's interim authority, audit committee evaluation, nothing about who would coordinate operations, nothing about who would manage Q4 close, nothing about who would interface with external audit. Margaret had filled that vacuum. Without authorization, without delegation, without anyone objecting, she'd simply started coordinating, and everyone had accepted it. I searched for historical precedent. Found one, 2019, prior CFO retirement. During that 6-week interim, Thomas Wright, then Senior VP of Finance, had coordinated operations. Thomas had been Senior Finance leadership, had reported to the CFO, had been the logical coordinator. Margaret ran corporate strategy, didn't report to finance, had no operational responsibility for financial processes. But she was performing the same coordination function, without the same organizational position, without the same reporting relationship, just board membership and initiative and everyone's acceptance. On January 24th, I received the Hexagon revenue recognition analysis from legal. David Chen, subject Hexagon Q4 revenue legal review complete. Elena, per Margaret's request, we've completed legal review of the 2 Hexagon contracts. Conclusion, both contracts qualify for Q4 2024 revenue recognition per ASC 606. Documentation supports Rebecca's accounting treatment. No issues, Rebecca can proceed. David, the analysis was thorough, professional, standard legal support. But the request had come from Margaret, not from Rebecca, who needed the analysis, not from me, as audit committee member. David had treated Margaret's request as authoritative, had prioritized the work, had delivered results with no questions. The email timestamp showed 4:47 p.m. After hours, David had worked late to complete it, had treated Margaret's deadline as requiring immediate attention. I pulled system access logs, looked at what Margaret had been reviewing since the January 22nd meeting. January 23, accessed financial reporting system, subsidiary statements. January 23, accessed vendor payment system, Q4 professional services. January 24, accessed treasury management platform, intercompany transfers. Margaret had read-only access to all 3 systems, granted by Rebecca and Sarah in the days after Thomas's suspension. Now she was using it, reviewing subsidiary financials, examining vendor payments, monitoring cash transfers, not approving anything, just observing, having visibility, the kind of visibility a CFO would have. Margaret had that access, had been using it consistently, had been reviewing financial data across all 3 domains where authority had fragmented. The February 18 Audit Committee meeting would include Q4 results, Rebecca would present consolidated statements, the committee would review revenue recognition and subsidiary performance. But Margaret would have reviewed all underlying data before the committee met, would understand the complete picture before Rebecca presented, would have information the Audit Committee wouldn't have until February 18th. Not because she'd requested it, because Rebecca and Sarah had granted access without request, had opened their systems to her, had created visibility that preceded formal committee review. On January 27th, I received an email I hadn't requested, Sarah Chen, subject, Q1 2025 budget, preliminary allocation. Elena, per standard quarterly procedures, attached is the preliminary Q1 budget allocation for your review as audit committee member, final approval at the February 18th meeting. Sarah, I opened the attachment, department budgets, subsidiary plans, cash flow projections, capital expenditure allocations. Detailed, professional, the kind of document requiring weeks to prepare, but I hadn't requested it. February's agenda didn't include Q1 budget review. Quarterly allocations weren't usually provided to audit committee unless specifically requested. I checked distribution. Elena Chen, Margaret Seo, Julian Vance. Not Rebecca, the person with interim reporting authority. Sarah had prepared it, had distributed it to board members and CEO, had bypassed Rebecca entirely. I reviewed the allocations. Most were consistent with historical patterns, but one line item was different. Professional services, corporate development, $375,000, $150,000 higher than Q4, a 67% increase. I clicked into detail. Blackwood Strategic Partners, $125,000, McKinsey & Company, Bain & Company, Strategic Advisory, TB, $250,000, Blackwood continuing at standard rate, McKinsey and Bain zeroed out. Replaced by $250,000 for Strategic Advisory TBD. To be determined, no vendor specified, no scope defined, just budget allocation for advisory services without a provider. I closed the spreadsheet, February 18th, 3 weeks away. That meeting would include Q4 results, Becca, Q1 budget approval, Sarah, CFO interim authority evaluation, Elena. The evaluation was my responsibility. The committee had suspended Thomas pending review of his Q2 decisions. That review ended April, but the committee would provide progress update in February. The update would require me to articulate what I'd found, what questions remained, whether Thomas's suspension should continue. But February would also be the first time the committee would see how the interim structure was functioning, would observe Rebecca and Sarah coordinating, would see Margaret facilitating, would see how authority had relocated in 6 weeks since Thomas's suspension, into a configuration that had emerged without board design, that operated without formal documentation, that produced quarterly budgets and coordinated financial closes and managed external relationships. That was functional, efficient, proceeding normally, without a CFO. The February 4th draft financial statements arrived at 6:47 a.m. Not from Rebecca, from Margaret. Subject line, Q4 2024 draft statements committee review. Elena, attached are the draft consolidated financial statements for Q4 2024. Rebecca and I have completed preliminary review, no material issues identified. Key items for your attention. Hexagon revenue recognition, $2.7 million, legal approved. Intercompany reconciliations, complete as of January 31st. Professional services expense, $700K, consistent with budget. The audit committee meeting is February 18th. I've scheduled a pre-meeting on February 11th for any questions before formal review. Margaret, I opened the attachments, balance sheet, income statement, cash flow statement, subsidiary schedules, standard quarterly package. The statements were complete, professional, ready for audit committee review, but they'd been sent by Margaret, not by Rebecca, whose interim reporting authority included consolidated statement preparation. And Margaret had written, Rebecca and I have completed preliminary review, as if they'd reviewed together, as if Margaret had approval authority over Rebecca's work. I checked the document properties. The file had been created January 29th, modified February 3rd at 4:47 p.m., last modified by MCO. Margaret had made the final edits to the consolidated statements, had updated numbers, had finalized formatting, had prepared the package for audit committee distribution, had performed CFO review function on statements Rebecca had prepared. I pulled up my calendar. February 11th, the pre-meeting Margaret mentioned, found the entry, created January 28th. Meeting, Q4 financial review, pre-committee discussion, time 2 p.m., 3:30 p.m. Location, Margaret Seo, Rebecca Portman, Elena Chen, Margaret Seo. Margaret had scheduled a pre-meeting for the audit committee review, had created it 2 weeks ago, before the draft statements existed, before Rebecca had completed consolidation work, had anticipated that a pre-meeting would be necessary, had structured it as part of the quarterly close process, had positioned herself as organizer and facilitator. I opened the meeting details, found an agenda Margaret had attached on February 3rd. Agenda, revenue recognition walkthrough. Expense classification review, subsidiary performance analysis. Audit committee presentation approach. 3 items for Rebecca to present, 1 item for Margaret to direct. The structure was clear. Rebecca would explain the technical accounting. Margaret would determine how it would be presented to the audit committee. Margaret would control the narrative. I replied to Margaret's email at 7:23 a.m. Margaret, thank you for the draft statements. I have questions about the review process. Who authorized your access to modify the consolidated statements? Rebecca holds interim reporting authority. The statements should come from her office, not yours. Elena. Margaret responded at 7:41 a.m. Elena, I didn't modify the statements substantively. I formatted the final package for distribution. Rebecca prepared all content and signed off on accuracy. The collaboration is necessary given the interim structure. Rebecca handles technical accounting. I handle board communication and coordination. Happy to discuss at the pre-meeting on the 11th. Margaret, Rebecca handles technical accounting. I handle board communication and coordination. A division of labor, articulated clearly, presented as established practice. Rebecca prepared. Margaret communicated. Rebecca handled substance. Margaret handled presentation, as if they'd agreed to this arrangement, as if it had been documented and approved, as if Margaret's coordination role had evolved into review authority. The February 11th pre-meeting began at 2 p.m. Rebecca arrived with her tablet, sat across from Margaret. I took the chair between them. Margaret opened her laptop, pulled up the draft statements on the wall display. Rebecca, walk us through revenue recognition. Rebecca looked at her tablet. Total Q4 revenue was $47.3 million. That includes $2.7 million from Hexagon. The 2 December contracts we discussed were reviewed by legal, both qualified for Q4 recognition per ASC 606. Documentation is complete? Margaret asked. Yes, Rebecca said. Delivery schedules confirmed, customer acceptance documented, legal memo supporting the accounting treatment. Margaret made a note. Elena, questions on revenue. I looked at the statements on the wall. The revenue number was reasonable. The Hexagon contracts had been legally reviewed. The documentation existed. But Margaret was directing the meeting, was asking Rebecca to present, was asking me to question, as if she were chairing the audit committee, as if this pre-meeting were a formal committee session. The documentation is adequate, I said. I'll want to review legal's memo before the 18th. I'll send it today, Rebecca said. Margaret moved to the next item. Expense classifications. Any unusual items? Rebecca scrolled on her tablet. Professional services were $700 in Q4, consistent with budget. Blackwood Strategic Partners was $125K. McKinsey support was $340K. Remaining was smaller advisory engagements. All properly allocated to benefiting entities? Margaret asked. Yes, Rebecca said. Parent company costs allocated to parent, acquisition-related costs allocated to Hexagon. No cross-entity charges requiring adjustment. Margaret looked at me. Satisfied with the allocation methodology? I watched this exchange. Margaret asking questions, Rebecca answering. Margaret asking for my approval. The dynamic was clear. Margaret was directing. Rebecca was reporting. I was being asked to validate. The methodology appears consistent with prior quarters, I said. Margaret made another note. Move to the next item. The meeting continued for 47 minutes. Rebecca presented each section of the financial statements. Margaret asked questions. Margaret documented my responses. Margaret determined which items required additional explanation at the February 18th committee meeting. Margaret controlled the agenda, controlled the timing, controlled the flow of information. Rebecca provided technical content. I provided oversight commentary, but Margaret directed the conversation. At 2:47 p.m., Margaret closed her laptop. Thank you both. I think we're ready for the 18th. Rebecca, I'll finalize the committee presentation package by Friday. Elena, you'll receive it Monday. Rebecca stood, gathered her materials, left without comment. I remained seated. Margaret looked at me. Something else? This meeting felt like a committee session, I said. Not a preparation session. It was preparation, Margaret said. We prepared Rebecca's presentation, we identified questions you might have, we ensured the February 18th meeting will be efficient. You're not on the audit committee, I said. I'm facilitating the close process, Margaret said. The committee meets February 18th. Rebecca will present. You'll review. I'm ensuring the presentation is complete and the documentation is organized. You're doing more than facilitating, I said. You're directing. Margaret was quiet for 3 seconds. Someone has to direct, she said. Thomas is suspended. Rebecca has reporting authority, but no coordination mandate. Sarah has transaction authority, but no reporting mandate. The committee meets in 7 days. The statements need to be ready. I'm making sure they're ready. Without board authorization, I said. Without formal authorization, Margaret corrected, but with everyone's acceptance, including yours. You attended the January 22nd coordination meeting. You attended this pre-meeting. You haven't objected to any process I've implemented. Your participation constitutes acceptance. She picked up her laptop, left the conference room. I sat alone. Margaret had articulated the logic. Someone had to direct. The structure had fragmented. Coordination was necessary. Everyone had participated. Participation was acceptance. The argument was defensible, procedurally sound, impossible to refute without challenging the entire interim structure that had emerged. And Margaret had positioned my attendance at these meetings as implicit approval, had created a record that I'd participated in her coordination process, had documented my presence as consent. On February 13th, I received the final audit committee package. Margaret, subject February 18th Audit Committee, final materials. Elena, attached is the complete package for Tuesday's meeting. Consolidated financial statements final, legal memo Hexagon revenue, Q1 2025 budget allocation, external audit engagement letter, committee meeting agenda. All materials have been reviewed and approved by Rebecca and Sarah, budget. See you Tuesday. Margaret first opened the attachments. The package was comprehensive, professional, everything the audit committee would need for the February 18th meeting. But the email said materials had been reviewed and approved by Rebecca and Sarah. Not prepared by Rebecca and Sarah. Reviewed and approved, as if Margaret had prepared the package, as if Rebecca and Sarah had validated her work. The relationship had inverted. Margaret was producing. Rebecca and Sarah were reviewing. I opened the meeting agenda. Audit Committee meeting, February 18th, 2025. Call to order, Q4 2024 financial results, Q1 2025 budget approval, external audit planning, Margaret So, CFO interim authority evaluation, executive session. The agenda listed Margaret as presenter for external audit planning, not Rebecca, not Sarah. Margaret would be presenting to the audit committee. Would be standing at the front of the room, would be walking through Deloitte's engagement approach and fieldwork timeline, would be performing a function that belonged to the controller or CFO. I pulled up the February 18th calendar entry, created by Margaret on January 28th, found the meeting details. Meeting owner, Margaret CO, room reserved by Margaret CO, materials prepared by Margaret CO. Margaret had organized the meeting, had reserved the room, had prepared the materials, had structured the agenda, had positioned herself as the person running the audit committee meeting. I was chair of the audit committee. The meeting should have been organized by me. The agenda should have been set by me. The materials should have been compiled at my direction. But Margaret had done it. Without asking, without coordinating, without acknowledging that committee meetings were my responsibility, had simply taken ownership. Had executed. Had created a structure where she controlled the meeting logistics and content, and I'd received the package, would review the materials, would attend the meeting, would participate in the structure Margaret had built. My participation would constitute acceptance. Again, I opened my secure notes. February 13th, observation. Margaret organized February 18th audit committee meeting. Margaret prepared committee materials. Margaret listed as presenter for external audit item. Margaret positioned as meeting owner, not facilitator. Rebecca and Sarah listed as having reviewed and approved materials. Margaret prepared. Authority relationship has inverted. Margaret produces. Rebecca, Sarah validate. Elena participates. Pattern. Margaret has assumed committee coordination without authorization. Participation is being documented as acceptance. I closed the notes. 5 days until the February 18th meeting. 5 days until the audit committee would convene to review Q4 results, approve Q1 budget, and evaluate Thomas's interim suspension. 5 days until the committee would see how the interim structure was functioning. would see Margaret coordinating, Rebecca reporting, Sarah approving, would see the configuration that had emerged in the 6 weeks since Thomas's suspension, the configuration Margaret had built. On February 17 at 4:47 p.m., I received a calendar notification, not an invitation, a notification of an event that had already been scheduled. Meeting, Board Executive Session, CFO Structure Discussion. Date February 25, 2025, 10 a.m. Location, Conference Room, A. Attendees, Full Board. Organizer, Julian Vance. Added by Margaret CO on behalf of Julian Vance. The meeting was 8 days away, after the February 18 Audit Committee meeting. After the committee would review Q4 results and discuss Thomas's interim suspension status. The subject line was specific: CFO structure discussion. Not CFO interim authority evaluation. Not Thomas Wright suspension review. Structure discussion, as if the board would be discussing the permanent organizational structure for the CFO function, as if Thomas's suspension was becoming permanent, as if the interim arrangement was becoming the solution. I opened the meeting details, found an agenda Margaret had attached. Agenda, Q4 financial results summary, interim authority structure assessment, operational effectiveness review, permanent CFO structure options, decision and implementation timeline. The agenda moved from assessment to decision, from reviewing how the interim structure was functioning to determining permanent CFO structure options. The meeting was positioned as a decision point, not an evaluation, a decision. I checked the calendar entry creation date, February 12th, 5 days ago, before the audit committee had met, before the committee had reviewed Q4 results, before the committee had discussed Thomas's suspension. The board meeting had been scheduled before the audit committee meeting had occurred. The agenda had been set before the committee had provided its evaluation. As if the decision had already been made. As if the February 18 audit committee meeting was procedural. As if the February 25 board meeting would simply formalize what had already been determined. I pulled up my email, started typing. Julian, I received notification of the February 25th board meeting regarding CFO structure. The agenda indicates the board will discuss permanent structure options. The audit committee hasn't completed its evaluation of Thomas's interim suspension. That evaluation is scheduled for discussion at tomorrow's meeting. Any board decision about permanent CFO structure should follow the committee's assessment, not precede it. I recommend rescheduling the February 25th meeting until after the audit committee provides its findings. Elena, I sent it at 5:04 p.m. Julian replied at 5:19 p.m. Elena, the February 25th meeting will consider the audit committee's input along with other factors. We're not making final decisions, just discussing options. The interim structure has been functioning for 6 weeks. The board needs to assess whether to extend it, modify it, or transition to a permanent appointment. Margaret has been coordinating with Rebecca and Sarah to prepare materials for the discussion. You'll receive those materials after the audit committee meets on the 18th. See you tomorrow. Julian, Margaret has been coordinating with Rebecca and Sarah to prepare materials. Margaret was preparing materials for a board meeting about permanent CFO structure, was coordinating with Rebecca and Sarah to develop the analysis the board would review, was building the case the board would consider, was controlling the information that would inform the decision about who would permanently hold CFO authority. I closed my email. Tomorrow was February 18th. The audit committee would meet, would review Q4 results, would discuss Thomas's suspension, would provide findings. But those findings would be incorporated into a structure Margaret had already built, would be assessed against materials Margaret had already prepared, would inform a discussion Margaret had already framed. The February 18th meeting wasn't the decision point, it was documentation. Evidence that the audit committee had reviewed and provided input. The February 25th meeting was the decision point, and Margaret had already scheduled it, had already set the agenda, had already positioned it as a discussion of permanent structure options, had already determined what the board would decide. The February 18th audit committee meeting began at 9 a.m. David Chen attended as general counsel. Rebecca presented Q4 financial results. Sarah presented Q1 budget allocation. Margaret presented external audit coordination. I provided interim suspension evaluation findings. Stated that Thomas's Q2 allocation decisions required extended review. Recommended continuation of interim authority structure pending completion of vendor detail analysis and intercompany reconciliation assessment. The committee voted unanimously to extend Thomas's suspension through April 30th, 2025. Standard governance, documented process, appropriate oversight. The meeting adjourned at 10:47 a.m. At 2:34 p.m., I received an email from David Chen. Subject: Draft Board Resolution, CFO Interim Authority Extension. Elena, attached is a draft resolution extending Thomas Wright's authority suspension and documenting interim reporting structure. This formalizes arrangements that have been operating since January and ensures governance documentation aligns with operational practice. Board review required by February 21st. Please provide comments by COB tomorrow. Final language subject to revision based on director feedback. David, I opened the attachment. Draft Resolution Board of Directors, Vance Global Incorporated, February 18, 2025. Whereas, the Audit Committee has recommended extension of the temporary delegation of CFO authority pending completion of evaluation activities, and whereas operational continuity requires documentation of interim financial reporting and transaction approval responsibilities. Now therefore be it resolved, the temporary suspension of Thomas Wright's CFO authority is extended through April 30th, 2025, subject to Audit Committee evaluation and reporting. During this period, interim financial reporting and oversight authority shall be allocated among Rebecca Portman, Sarah Chen, Director Treasury, and Margaret Seo, Board Member Strategy, as coordinating liaison. Margaret Seo is designated as Board Liaison for Financial Operations Coordination, pending Audit Committee review of interim structure effectiveness. Transaction Approval Authority shall continue under existing delegation matrix with modifications subject to quarterly Audit Committee assessment. This interim structure shall remain in effect until the earlier of A. April 30th, 2025, or B. Audit Committee recommendation for alternative structure. The resolution was 3 pages, detailed, professional, standard corporate governance language, but the structure was documented as interim, subject to Audit Committee review, pending assessment, not permanent, not final. Margaret's designation included the qualifier pending Audit Committee review of interim structure effectiveness. The language preserved oversight, created periodic review requirements, maintained Audit Committee authority to recommend changes. I read the resolution twice, looking for language that would formalize Margaret's authority beyond committee oversight. Found constraints. The role was described as coordinating liaison rather than operational authority. The designation was pending committee review. The structure remained subject to quarterly assessment. The resolution documented what was operating, but didn't lock it in. I checked the signature block. The resolution required majority board approval via written consent. Review period February 21st. Final language subject to director feedback. If directors provided revisions, the draft would be modified before circulation for signature. The approval process allowed for adjustment. I opened a reply to David. David, draft resolution is acceptable with current language regarding Audit Committee oversight and periodic review requirements. I want explicit confirmation that Section 5 gives the Audit Committee authority to recommend structural modifications at any point before April 30th, not just at the end of the interim period. Please clarify this in final language before board circulation. Elena, I sent it at 3:17 p.m. David replied at 3:52 p.m. Elena, agreed. I'll revise Section 5 to state, the Audit Committee retains authority to review and recommend modifications to this interim structure at any time during the evaluation period. Final draft will circulate tomorrow, pending any additional director comments. David. The revision was minor, but substantive. The Audit Committee's oversight wasn't deferred until April. It was continuous, active, available at any point. The structure Margaret had built could be modified, could be adjusted, could be unwound if the committee determined it wasn't functioning appropriately. The authority wasn't locked, it was provisional. I spent February 19th reviewing the final resolution language. David circulated the revised draft at 10:23 a.m. Section 5 now read, This interim structure shall remain in effect until the earlier of A. April 30th, 2025, or B. Audit Committee recommendation for alternative structure. The Audit Committee retains authority to review and recommend modifications to this interim structure at any time during the evaluation period. The language was clear. The committee could act, could recommend changes, could modify the structure without waiting for the suspension period to end. The written consent circulated at 11:47 a.m. Board members had until February 21st to sign. I checked signatures at 4:41 p.m. on February 19th. 3 signatures recorded: Julian Vance, 2/19/11 a.m., David Hernandez, 2/19/2:34 p.m., Patricia Morrison, 2/19/4:23 p.m. 3 of 7, Thomas recused. Margaret hadn't signed yet, appropriate given she was named in the resolution. James, Chen, and I hadn't signed. One more signature would create majority approval. At 9:23 a.m. on February 20th, Margaret signed. 4 signatures, majority achieved, the resolution was effective. At 10:03 a.m. I received an email from David Chen, subject, Board Resolution Effective, CFO Interim Structure. Board members, the written consent resolution regarding CFO interim authority has received majority approval and is now effective, subject to ongoing Audit Committee oversight. Interim Financial Operations Structure. Financial Operations, interim subject to committee review. Board Liaison and Coordination, Margaret CO. Financial Reporting, Rebecca Portman. Transaction Approvals, Sarah Chen. Audit Committee Oversight, Alina Chen. This structure remains in effect through April 30th, 2025, or until the Audit Committee recommends modifications. Next Audit Committee review of interim structure effectiveness, March 18th, 2025. David Chen, General Counsel. The email went to all directors. To Thomas, to the executive team. The structure was now documented, official, but subject to committee review. Margaret's coordination role was designated, but under Audit Committee oversight. Rebecca and Sarah's functions were specified, but subject to quarterly assessment. The organizational structure that had emerged was now formalized as provisional governance, not permanent, not final, pending committee determination. On February 20th, the coordination patterns adjusted. Margaret sent a calendar invitation for a weekly financial operations meeting, Mondays at 9 a.m., recurring through April 30th. Attendees: Margaret CO, Rebecca Portman, Sarah Chen, Elena Chen. I was listed as required, not optional. The meeting agenda specified prior week transaction review, current week commitments and approvals, cash position and forecast, upcoming reporting deadlines, issues and escalations. Committee oversight items. The final agenda item was new. Committee oversight items. My responsibility to raise concerns, questions, or review requirements during the weekly meeting. The structure acknowledged Audit Committee authority, built it into the coordination process, created a mechanism for continuous oversight rather than periodic review. I attended the February 24th meeting, arrived at 8:58 a.m. Margaret opened her laptop, pulled up a dashboard on the wall display, real-time financial metrics, cash position, accounts receivable aging, vendor payment schedule, subsidiary performance. Week of February 17 transaction review, Margaret said. Sarah, anything unusual? Sarah opened her portfolio. 11 purchase orders approved above $500. Total $4 million, all within budget, no surprises. Vendor payment status, Margaret asked. Current, no delays. 2 payments to Blackwood Strategic process per standard schedule. Margaret made a note. Rebecca reporting status. Rebecca looked at her tablet. Q4 external audit fieldwork started Monday. Deloitte is on schedule. No requests for additional documentation yet. Internal monthly close for January completed. Subsidiary financials reconciled. Any issues? Rebecca asked. None, Rebecca said. Margaret moved to the next agenda item. Current week commitments. Sarah, what's requiring approval this week? Sarah reviewed her portfolio. 6 purchase orders in the queue. Total $2.8 million, all budgeted. 3 vendor contracts up for renewal, standard terms. Proceed with approvals, Margaret said. Rebecca, any reporting deadlines? Monthly board package due Friday, Rebecca said. Standard financials, January results. Elena, committee oversight items? Margaret asked. I looked at the dashboard. The operations were proceeding normally. The coordination was efficient, but I needed to establish that oversight was active, that the committee's authority was being exercised. I want transaction detail for all Blackwood strategic payments going forward, I said. Not just approvals, underlying invoices and deliverables for committee review. Margaret made a note. Sarah, can you provide that? Yes, Sarah said. I'll route copies to Elena when processing future Blackwood payments. Noted, Margaret said. Anything else for the committee? Not this week, I said. Margaret closed her laptop. Same time next week. The meeting had lasted 22 minutes. Margaret had coordinated, Rebecca and Sarah had reported. I had exercised oversight. The dynamic was established, but oversight was present, active, built into the structure. On February 25th, the board met to discuss CFO structure planning. Julian opened the meeting. The interim structure has been functioning for 6 weeks. We need to begin planning for what happens after April 30 when Thomas's suspension period ends. Margaret presented. Analysis of the interim structure. Operational metrics, transaction volumes, reporting timelines. The interim structure has demonstrated stability, Margaret said. Q4 close completed on schedule. External audit proceeding normally. No control deficiencies identified. She clicked to the next slide. The board has 3 options for post-April 30th structure. 1. Restore Thomas Rights authority subject to audit committee clearance. 2. Initiate external CFO search process. 3. Extend interim structure pending completion of permanent organizational design. Julian looked around the table. Thoughts? David Hernandez spoke first. We should wait for the audit committee's final evaluation before making any decisions. That's due in April. Patricia Morrison nodded. Agreed. The interim structure is working. Let's not change it prematurely. What about long-term planning? James Chen asked. We can begin contingency planning, Julian said, but any structural changes should wait until the committee completes its work. Margaret advanced to the next slide. I recommend the board authorize development of 3 implementation scenarios, 1 scenario for each option. Development work can proceed in parallel with the committee's evaluation. When the evaluation concludes, we'll have executable plans ready. The proposal was procedural, planning, not decision. Preparation, not commitment. That seems reasonable, Patricia said. We develop options, the committee completes its review, then we decide based on complete information. Julian looked at me. Elena, any concerns with Margaret developing scenario plans while your evaluation continues? As long as it's planning only, I said. No implementation, no commitments, no structural changes until the committee reports. Understood, Julian said. Margaret, proceed with scenario development. Present options to the board in April after the committee's evaluation is complete. The board voted unanimously. Scenario planning authorized. Implementation decisions deferred until April. The meeting adjourned at 11:34 a.m. At 1:23 p.m., I received an email from Daniel Ward. Subject: Document Access Update Morrison & Pierce Archive. Elena, further update on the Morrison & Pierce materials. The third-party storage facility has completed their system migration. However, Portman Associates has requested additional time to complete their privilege review process. They've indicated that the 2012 investigation materials contain attorney work product that may require redaction before release. Their review team is currently engaged on other matters. Revised estimated timeline. Document review completion by end of Q2 2025. Anticipated release date July 2025. This timeline extends beyond your April committee reporting deadline. Let me know if you want to request priority status, though that may require additional legal justification. Daniel, end of Q2, July. 3 months after Thomas's suspension would end. 3 months after the board would make CFO structure decisions. 3 months after the audit committee's evaluation would be due. The Morrison & Pierce archive contained Arthur's 2012 investigation, the analysis that documented Gregory Vance's founding transactions, the historical context that might explain why Arthur had commissioned the investigation, why the timing had aligned with Julian's promotion to CEO. That information remained inaccessible, would remain inaccessible through the committee's evaluation period, would remain unavailable until after the board decided what permanent CFO structure to implement. I opened a reply. Daniel, request priority review status. The materials are directly relevant to the audit committee's evaluation of CFO authority and governance structure. Provide whatever legal justification Portman & Associates requires. I need these documents before the April committee reporting deadline. Elena, I sent it at 1:47 p.m. Daniel replied at 2:34 p.m. Elena, I'll submit the priority request today. However, I should manage expectations. Portman and Associates operates on their own timeline. Priority status may accelerate their review, but they're under no obligation to meet external deadlines. Best case, documents available by late April or early May. Realistic case, June. If complications arise, July as originally estimated. I'll keep you updated on their response. Daniel, late April. After Thomas's suspension ended, after the board made structure decisions, after the window for using the information as part of the evaluation closed. The timing was precise. The documents would become available after the decisions they might inform had already been made. Margaret's interim coordination authority was now official, subject to committee oversight but operational, functional, documented. The permanent structure remained undecided. Scenarios were being developed, options would be presented in April, and the historical context that might explain how authority had been structured 12 years ago, why Arthur had acquired his position, why he'd commissioned the investigation, why the system had been designed the way it was, remained locked in an archive requiring legal review that wouldn't complete until after the evaluation period ended. Power had relocated, had been documented, had been made provisional but operational, and the explanation for why it had relocated remained inaccessible on a timeline I couldn't control.